And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, Tuesday, December the 20th. My name is John Hoagland. I thank you for hanging out with me for a little while and trusting me with your time. As always, we're seeking accurate context here, thinking risk management before doing anything, and remaining patient in our trading. Happy Hanukkah to those that are celebrating right now. I got to remember it's 5 days till my boss's birthday. Got to remember that. Merry Christmas, everyone. It's the holiday season, and I'm hoping that the Santas and trading have been good to you. This morning we had the housing starts and permits numbers come out, a little bit mixed numbers. Permit probably a little bit more important than the starts, but the starts were looking for 1.4 million. Came out higher than that at 1.427 million, so few more housing starts starting, but fewer permits being sent out. So they were looking for 1.485 million, came out much lower than that at 1.342 million. Markets are currently digesting that information. We've been higher, we've been lower. Big jump around last night because the Bank of Japan finally did something with their rates, first time in 5 years. Stocks were going to open higher. They were going to open lower. Now it looks like they're going to open pretty much dead steady. After taking a brief tour to the downside last night, following that move by the Bank of Japan to tighten rates, first time in approximately 5 years, I think their rate is now approaching 0.5%. So they don't really have very high interest rates, but it is going to increase the cost of doing business in Japanese yens. Crude prices have been waffling ahead of the API and the EIA numbers. The API this afternoon, EIA, of course, tomorrow. Struggling for any kind of direction. Demand seems to be slowing. The president has stated they are going to be on the buy side, refilling the strategic petroleum reserve. And Putin is just kind of pondering what the G7 price caps is going to do and what he may do about it. Who knows how that's going to work out. We are, again, looking really, really kind of steady, a little bit lower. The Dow is actually a little bit higher. NASDAQ down about 46, 45 points, and the S&P down a shallow 6 points. We're going to check all this out on the charts and see what we can figure out we might be looking at today. The VIX is a little bit lower this morning. Is that right? I've got it in the wrong spot here. Hang on. No, VIX is a little bit higher this morning. 22.54. Dollar index lower. The dollar index higher, 104.31. I've got things mixed up on my notes here. That happens from time to time. And the yield on the 10-year up this morning, 3.66%. So almost 10 basis points higher. After that Bank of Japan move. So, we've got, opportunities in front of us. We're going to see what we can kind of prep ourselves for as the markets open up and as the equities open up here in just about 40 minutes. Make sure that if you like what we do here on the Forecast Recap, anything, tell your friends and make sure to hit the lucky like button. Share, comment, questioning. Feedback is always appreciated, and I do enjoy a good heckling from time to time. Love is, of course, always welcome on the forecast recap and everything we do. Subscribe to our YouTube channel so you can get notifications when we do go live. And I got to say good morning to everyone. Dimitar's first in the room. Dimitar wins the prize this morning. Shaw Cunningham, good morning, Spencer. Charles Scott saw and he conquered. Terry King, JST Wave, Alejandro Caprice, Joel MB, Fred Decker, probably in a pretty good mood this morning after the victory of the Green Bay Packers over the LA Rams. I sat down and started watching that game, Fred, and I thought, there's no way that a fair weather team is going to come to the frozen tundra and in a 20-degree night and they're going to beat the Green Bay Packers. It just didn't make sense to me. And 24-12, they certainly did win. So congratulations, Fred, and to the Green Bay Packers. Where was I? Oh, Caesar, good morning. Vince, my guy, good to see you this morning. ZK, hope we all have another great trading day with low risk. We can choose the risk that we take. ZK, of course. I know you're looking forward to new horizons here at Top Step. We're all very happy for you. Steven, good morning from Atlanta. It's probably cold in Atlanta even this morning. What is it here today? 23. Hey, it warmed up a little bit, it seems like. Timothy Marks, good morning. Sarah Hall, prayers and love to you as well. Dark Kevin, Jason Lewis, Grim Reaper. Love scalping that bear market. Sell, hoagie, sell. Rob T, good morning. Glitter Sandwich, Grim Reaper Trader. Although it got the Darth Vader black. We must need to sell. Well, it's a new cardigan that I got prior to Christmas. And it's very cozy and warm. It's nice. It's kind of, cool in the house here. I got Lacey sound asleep next to me in her bed, who is also kind of Darth Vader-ish. But sweet as pie. Haggle Matters, good morning. Joel MB. My wife texted me a selfie in the new dress and asked, does this make my butt look big? I text back, no. My phone auto-corrected in response to, moo, please send help. Joel, you are a funny dude, man. That is good stuff. I'm going to probably be using that over the next week or two. Anissa, good morning. Fred Decker. It isn't Christmas until Hogue wears his goofy Santa hat on the market forecast. Of course, Fred, I know that. Well, you never know. We may have a special guest presenter one of these days. JD, Nastic, JT, good morning. Adrian, David, Andrew, Ponzi, Zombie Killer. We could use some of you around here, Ponzi Zombie Killer. Denise, good morning. It was a fun game. Grand Sing Music. Stopped trading at 500 yesterday. See, that's it feels better today, doesn't it? If you don't lose too much the day before, you feel a little bit better the next day. Ted, good morning. Dr. VJ Rusty Golfer. Cold in Florida also, 60 degrees. I might actually have to wear a sweater or something if I were in Florida. Got to wear one inside here. May have to wear one outside in Florida. I may have to get down there. Thinking of where I'm going to retire in a few years. NASDAQ, Hogue Vader. Grounds Hero, good morning. Chili 79 here in Thailand. Shaw, man. Moo, LOL. Black shirts are for rock stars. Yes, of course, right. I should wear my Led Zeppelin Christmas shirt if I had one. I just have a Led Zeppelin shirt. Maybe I'll wear that, though. Autocorrect always gets me too. Classic, yes. We're all appreciating that joke there, Joel MB. I didn't read it before I started reading it, and I was getting a little bit worried as I was reading through it where it was going, but that was a funny joke. We all appreciate that. We can all use a little bit of levity, right? All right. Good morning, George. Everybody says good morning, Lacey. She's flopping around on her bed trying to get comfortable. All right. We have nothing yet left to do but check the charts. NASDAQ, I'm with you. I have all my Led Zeppelin vinyl at the top of my pile of albums over there. I get a little bit of Led Zeppelin here. And NASDAQ, I mean, you can't see it, but this is an unused ticket for a 1977 Led Zeppelin concert at the Chicago Stadium that never got played. They canceled the last 6 shows of the tour because that's when unfortunately Robert Plant's son passed away, so they canceled the rest of the tour. Now, I didn't have that ticket, wasn't going to the concert. I was a little bit too young, my parents said, but I found somebody that had a few of those, and I talked him into letting me have one, and now I keep it as the Led Zeppelin concert that I never did get to go to. But boy, it sure would have been fun. All right, speaking of fun, let's take a look at the S&Ps now. All right. So we had a knee-jerk below weekly kickoff low last night after the Bank of Japan did what they did. The real open interest, we lost 1900 at this important inflection level yesterday. We traded to it. We lost open interest on the way. We lost 502,000 total. That is what we were talking about yesterday, and the fact that there was about 500,000 contracts that were going to expire and settle in cash. They settled in cash yesterday, the day after expiration. So now we can start to lean more on our open interest and volume information now that rollover is in the past. For the next 2.5 months, we're going to get much clearer information. We took at least one more step towards that measured move, at least in the overnight last night. That measured move, again, has us down to about 3760-ish off of this head and shoulders reversal pattern. We're still wrestling with weekly kickoff low, which is now with rollover over, the longer time frame traders are free to adjust inventory without being concerned about getting their rollover done cheaply. Does that mean we're going to have a big day today? No. Does it increase the probabilities of it? Maybe a little bit. Well, let's take a look at the 30-minute chart and take a look at what day time frame opportunities we may find. So we are one time framing lower. We are at an important inflection level in the weekly kickoff low. Okay. Yesterday we kind of talked about how this whole area was going to be kind of target rich between weekly kickoff low and last week's low. This is one of the, I think it's the 15 or the 20% off the all-time high that's kind of running right through us here. Where is that? $844. Yeah, it's the 20% off the all-time high. Now, is that, a technical level? No. Is it a visual level? Yes. After we finished the day yesterday, look where price went to the previous week's low. It traded down below weekly kickoff and now is back above that level. Do we have any overnight inventory in this market? I'm going with kind of no. If there is, it may be to the short side. We're opening in range, but below value. So a lot of what I'm going to be looking for is the market seeming to accept value from yesterday. If that's the case, there's some possibility for some repair. And there's some interesting things in the profiles. Let me make sure I got everything written here. It's going to be a little bit data sensitive, but there's no data for us, anything left for us to worry about today as far as economic numbers are concerned. There's a bill announcement, an 8-week bill announcement, 4-month bill announcement. There's just some smaller bill announcements and settlements today. So there's nothing left really for us to worry about as far as known releases. Anything, of course, can happen, especially in this crazy world. So we're looking at potential supported weekly kickoff low here. That level to be finite is 38.30, but there's nothing finite in futures trading, right? This is going to be, I believe, removed because I think we got to that naked point of control. I'll check that out later, but at least we know that we've visited it. So again, maybe a little bit short, inside range and values, possible support, possible resistance. Here's the TPO. Here's the overnight. Overnight has a weak high. Yesterday, before the close, we put in a poor low. Well, we've been doing that. Not a very strong low here, not a very strong low here. Lots of excess at the highs. Now we're kind of hurting as far as excess at the highs. The market moved lower, did leave a poor low. There's so many highs and lows at this point of control. Even our overnight couldn't quite get to those levels. We had let me see here. So we had negative delta yesterday, which means that that more aggressive traders were working market orders on the sell side. It's congruent with direction. Were they longer time frame traders? I'm going with no, with only a 1900 contract increase in open interest. I don't think that the push to the downside yesterday was all that healthy. As a matter of fact, as far as the New York Stock Exchange volume is concerned, we didn't do 4 billion. So that's relatively anemic as far as volume is concerned. So we've got excess at the low, no excess at the high of the overnight. Do I put much stake in that? Not necessarily. I think it's more important for us to come back and check this level. We've got a couple of little anomalies up here, which when a market is really confident in one direction, it tends not to leave anomalies. And we've got, the point of control up here, which we were unable to reach in the overnight session. So going back to the 30-minute chart, the overnight high is at that kind of level where we found support, we waffled, we found resistance. Our overnight high, last week's low, is going to be an important level for me today. Our weekly kickoff low, yesterday's low, is going to be an important area of interest for me today. Inside of that, I'm going to be patient and I'm going to wait for the market to establish early range to find opportunities to limit risks on the extremes of that range. Now, this market knows that we are looking for consumer confidence tomorrow, existing home sales tomorrow, GDP, the final for quarter 3 is going to be out on Thursday. And we've got durable goods on Friday. So there's a lot of more important economic information coming later on in the week. Unfortunately, I'm going to miss the action on Friday because I'm going to start my holiday time off. I'll probably be watching just loosely, but probably not participating. So the year is moving quickly towards the end for me. Take a look at crude oil. So again, last week's low important for me. Yesterday's low slash weekly kickoff low, important level for me. Anything inside of that, I'm going to stay patient. I think we got our best opportunities to limit risk at these extremes. Weekly kickoff low, last week's low. Crude oil. So really just kind of indecision. We had a look at the weekly kickoff high yesterday that was rejected. Got relatively close to it already this morning, seemingly rejecting it. We had an up move yesterday, we did end up with some delta divergence. We're going to see that on the 30-minute chart. There may be an indication of some longer-term buying coming into this market. My question is that the president? Is that the U.S. replenishing the strategic petroleum reserve? They were going to be looking at around 70, so they've certainly put in the floor, at least for now. Lost 12,000 total open interest. We gained 11,000 in the February contract. So there is the implication that we added new longs against Delta, which would indicate longer time frame buyers. If that is the case, we may break out of our potential bull flag here and then see if we can get a test of weekly kickoff high in this trend line. Let's take a look at this on the 30-minute chart. So, whoa, it was a roller coaster last night. I would have probably gotten seasick watching this market. Overnight inventory, no. We do have a weak low. Okay, so if we did have longer time frame buyers, this may be more of an indication that the market got too short and rejected those areas than an incomplete downside auction. There was also a ledge in the profile right here, right where we are. 3607 is that ledge. It makes sense that it's attracting eyes. No overnight inventory. In range, in value says to stay patient. But here's the ledge I was just talking about. We just opened and drove right to it. It's attracting eyes. Here's our weak low that, again, may be more indicative of getting too short and then having the longer term buyers come in and just run all those shorts back into the market up here. It's almost a P shape, which would indicate short covering. An increase in open interest indicates new longs. Here's the divergence we saw yesterday. So by the end of the session, we saw approximately, well, I have a little bit more on another platform. We saw approximately a 4,300 contract divergence in Delta, while price maybe attempted to go higher, didn't do a very successful job of it. We've got that ledge that we're looking at right now. All right. NASDAQ, very similar to the S&Ps, but different. No, that's not what I'm looking for here. There we go. I hate that when that happens. All right. So now we get a true test of weekly kickoff low early in the session today. Our measured move from our head and shoulders is still down here at 10,800. Weekly kickoff is really the most important level that I can pick out for us this morning. We added 20,000 contracts in the March contract. So this is a much healthier downside move being presented to us than the downside move in the S&Ps yesterday. We lost 53,000, added 20,000. That's the 73,000 that settled in cash yesterday. Now, again, we're clear. We're going to be much more clear with open interest and all this information moving forward. But the March contract did add 20,000. So again, that it has the implication of new business pushing price lower. It's more likely to continue if volume were a little bit higher. But we do see that we had some new sellers coming into this market yesterday. We're again testing weekly kickoff low. Here's the 30. Settlement, 7 to 5 o'clock open. Do we holding maybe some shorts here? Are we going to open with a gap? We're probably not in the S&Ps. Of course, anything is possible. Here's that weekly kickoff low. We look down to it. We're back above it. See what happens in regular trading hours. It can provide a good risk limitation level. Take a look at the TPO chart here. We have that same kind of anomalies in a confident market doesn't necessarily leave those. So it looks like we're going to be opening possibly with a gap, maybe without a gap. We've got a weak high in the overnight. We've got excess at the bottom. And don't forget, weekly kickoff low is 11,110. 11,110 right down here. So we are going to get an early opportunity to see if that is going to provide us with some interesting areas for execution or some opportunity. Here's the gold. Bank of Japan shocked the U.S. dollar. Open interest yesterday in gold, moot, inert, adding 300 only. We're still range bound. We're still short time frame controlled. Look at the volume today already with that move last night. Here's the 30. Here's where all our volume came in last night. So we've opened with a gap. We got to go gap rules. We have not tested yet to this naked point of control. Weekly kickoff high is up here. The low of the range is down here. The upper end of the range is weekly kickoff high. Anything in the middle is possibly going to be short time frame levels being respected. It's short time frame control. Remember that. There could be a bit of a change here with the change in the Bank of Japan, but largely we're still range bound. Range bound rules apply. I'm a seller at the higher extreme of balance. I'm a buyer at the lower extreme of balance until proven wrong. Then you go with an accepted breakout. All right. Here's the TPO chart. Let's take a quick look at that. Kind of unremarkable as far as directional activity. We had excess on both sides. We still have excess. Weak low here, weak high here. We've got a weak high all the way up here. If we take out and accept above weekly kickoff high, which is 81.31, this could be a quick move to go check that level. Overall, gap rules remain. We haven't closed the gap. We're looking for opportunities to buy weakness until proven wrong. Nothing wrong with waiting until that first initial balance is established to see if the market offers you a cheap opportunity. If we go looking for it, we're going to find it. And for the euro, I'm kind of surprised how little the euro reacted to the dollar move last night. We've got an inside extended trading hour range. Volume looks like it's going to be pretty good today. Lower volume yesterday. It's still in rollover. We're, I think, expiring on Friday. So kind of unfazed. We've got a little bit of balance established here. Our current low, maybe even our current high, could be kind of construed as an area of balance for the last 2 sessions and 3, including today. Take a look at the 30. There's the knee jerk, but no sustained move. We're in range. We're in value. I'm going to try and stay patient. Upper extreme, the overnight high. Lower extreme, the overnight low. I think that's where our best opportunities are going to come to us, is in those zones. And remember, everything is a zone in futures trading. Take a look at the 10-year. We'll take a brief look at the natural gas because it's got quite the move going here. The 10-year has broken out of the range that it has been in for 2 weeks. This is a potential bigger move, right? We lost open interest yesterday on the we were still in value in balance. We increase open interest a lot today. That's going to be encouraging for shorts to continue to sell into this market. Remember, sometimes selling begets more selling. Sometimes buying begets more buying. I was looking at this morning like, oh, wow, we got an opportunity here. We're at the lower end of balance. Here's what it looks like on the 30 today. Really, the last week's low is kind of the lower extreme of balance. Look at where we've found resistance after breaking down below it. Now we're starting to see some continuation to the downside. The TPO charts on this in this market leave so many weak highs and lows. It's difficult to really use those. But what we do have is highs and lows. Even highs, even lows, same level. This is an important inflection in level area here. I've got basically written down here 113.21. This naked point of control. I think that's from what day was this? 24th of November. That's Thanksgiving. This point of control is really somewhat pivotal, and on such a small day too, right? I mean, this naked point of control just pierced right above the highs and then holds right above the lows all the way to today. I'm looking at this market. I'm finding that my thought is I want to sell strength and do it all day. Look at the natural gas. Oh, already down to this swing low. Island top, as my brother calls this, barcoding. Gap 2, gap below. Island top. Continuation. Yesterday, adding 2,100 in open interest. Volume wasn't all that great, but I love the open interest increase. Here is the 30-minute chart. If I can find it. There we go. I think we've opened with a gap. I think we've got some one-time framing activity going. I do not want to fight this. This is the swing low that I was kind of focusing on. And if we can't hold here, look out below. Why then is this happening now? My furnace has hardly stopped running. Because maybe people think that it's going to rally, so they all get long and there's nobody left to buy it, and we just continue to see sellers come into this market. Only the shadow knows. Stay tuned to as the market turns. It'll be interesting to see how that all these markets really finish out the day. I'll be here for the market recap if you want to come hang out for a little while. Wednesday is going to be the last recap of the day. Maybe we can sit, relax, have a little Kentucky snow cone. Yes, I'm looking at you. Will there be a Santa Claus rally? Well, I hope so. I hope so. All right, let's take our deep breath. Stay humble, grateful, and creative and centered in your trading today. Always capital preservation, but don't be scared. Fear just creates fear. Fear just creates losses. Fear, that's the other guy's problem. See you at 3 o'clock for the market recap. Trade well today. Be kind to yourself, be kind to others. Say a prayer for peace. And I will see you in 6 hours and 40 minutes. Have a great trading day.